Welcome to the Aaron Harber Show. My guest today, Dr. Dambisa Moyo. Dr. Moyo, thank you for joining me.
Thank you. It's a pleasure to be here. Thank you.
Love having you on the show. You're an author, multiple books, one of Time Magazine's 100 most important people in the world.
Apparently.
Very impressive. You're on the board of 4 different organizations, Barclays, Chevron, Barrick Gold, and of course Seagate. That's a very interesting range of companies.
Yes.
I'd like to talk a little bit about your board service too. And actually, let's start with that in terms of what you feel you bring to such a diverse group of companies.
So actually, it may seem diverse at first blush, but actually it's been quite deliberate in some sense of my selection. I was very interested in remaining in finance. My career has broadly mainly been in financial services. I worked at Goldman Sachs for almost 10 years. So I really wanted to make sure I continued to have a footprint in that area, which is why Barclays is somewhat an obvious choice. And then I was very keen to continue to be involved in areas that are really the lifeblood of an economy. And if you think about the energy sector and the mining sector, I mean, these are really massive inputs into economic growth, into human progress. And so I've been very privileged to be on both Chevron and Barrick's boards. And then finally, of course, in terms of looking to the future and innovation, everyone's talking about technology, about disruption, and what the implications might be for economic growth going forward, of course, and also how we live. So I thought having some visibility into what's going on in the technology sector would also be critically important.
Well, and of course, when you're talking about Seagate, we use Seagate products.
Fantastic. That's what I'd like to hear.
But we're disappointed that we haven't seen in the past year and a half the decline in the cost of storage that we anticipated.
I'll speak to them.
What's going on here? Are these companies talking to each other about pricing?
Well, no, surely not. That would be illegal.
Well, I'm aware of that. So anyway, no, we're delighted to do that. You know, I love your thoughts on the concept of globalization. There's a lot of discussion about globalization, and also, in your opinion, the costs and benefits of globalization, what it is, the costs and benefits, and also the distributional aspects in terms of how do we address, how can globalization help or does it not help, does it hurt those at the lower ends of the economic strata?
Great. So that's a fantastic question. It's obviously top of mind for public policymakers, but economics, academics, as well as business people. You know, what does the world look like? So we've had approximately 30 years of globalization. And just to remind everyone, including for the purposes of our discussion here, globalization really had 4 key pillars. One was about trade in goods and services, so it was supposed to be free trade across borders. Number 2 was about cross-border capital flows. That also was supposed to be relatively uninhibited and very critically important in terms of fueling economic growth around the world and obviously a key piece of investment.
The idea that investment dollars are going to go to the most efficient and effective location.
Absolutely, but of course, you know, people are looking for risk-adjusted returns that are high and significant, clear the cost of capital. So that was a critical piece of what the plan was. You know, we expect fundamentally that the markets are going to clear. So demand and supply would equilibrate, and so the money would obviously flow to areas where we could generate significant returns. And then the third aspect was about the movement of people, immigration, which has obviously been a very interesting and hot-bedded issue in the political sphere. And really, if you think about it, without digressing too much, we have had international institutions formed to deal with trade through the World Trade Organization, for example, and we have created international agencies to deal with cross-border capital flows through the International Monetary Fund. But we have actually not built an institution, and nor am I proposing that that's necessarily the only way to go. But the reality is, in terms of globalization, we have not delivered on a sort of broad global framework in terms of international migration. And so what we've ended up with is quite a fragmented, what I would call, you know, less globalized model of immigration. And then finally, I say it's part of globalization was really part of the Washington Consensus, was this idea that on a relative basis, government should be small. and that the real gains to an economy would be driven through the private sector. So those were the four key pillars of globalization, and what we're seeing now is actually a lot of a retrenchment, a reduction of all these four aspects. In terms of trade, the World Trade Organization has talked about the decline in trade growth rates over the past decade, certainly post the financial crisis. We have seen the increase in both naked protectionism, both in terms of tariffs and quotas rising. Just in the past year, there have been 644 new tariffs implemented, mainly by developed countries. I think that's an important piece, especially the countries that were really big leaders of this globalization agenda. They've actually now been leading this recession or reduction of globalization. But we've also seen not just naked protectionism, we've also seen other forms of protectionism through the uses of for example, exchange rates. But we've also, in terms of the second pillar, cross-border capital flows, we've seen a massive reduction in that. According to the Bank of International Settlements, we've actually seen a decline of approximately 10% or $2.9 trillion reduction in the amount of cross-border capital flows. A lot of that has to do, for sure, with the massive capital controls and restrictions around the financial sector post the financial crisis, but nevertheless, it has had implications for cross-border capital flows. And then, of course, the other argument is that cross-border capital is just moving back to the United States and to other developed regions, particularly as there's expectations of rate increases this year. And then, very quickly, just in terms of immigration, we do have 65 million people who are now refugees. This is critically important.
This is globally, of course.
Yes, globally. It's the highest number since World War II. It has been relatively disorganized, and a lot of it is because of political and economic unrest in different places. But nevertheless, it has meant that we do have a lot of issues around what the implications for public policy might be. And obviously, right, being here in the United States, we know that immigration is one of the key policy agenda items. And then finally, just in terms of the size of government, Angela Merkel, the Chancellor of Germany, talks about this idea of 7-25-50, the fact that Europe is 7% of the world's population, represents 25% of GDP, world GDP, but is essentially 50% of world welfare payments. If you add the United States into that, the rough estimates are approximately 12% of the world's population is in the US and Europe, just under 50% of world GDP, but nearly 90% of world welfare payments. The fact is 90% of the world's population lives in the emerging markets, some of the poorest places in the world. And so there's clearly a disconnection, which she was highlighting, around the sheer amount of welfare vis-a-vis the sort of needs of underperforming or relatively poor countries around the world. I've probably spoken too much, but you did ask me this question about distribution.
Well, and on the welfare side too, of course, you may want to adjust that in that simply dollars spent may not be a good measure, because the cost of providing, for example, medical care in a less developed nation, a dollar spent might go much further than a dollar spent.
You're absolutely right. And I imagine we're going to talk about education if we're talking about economic growth. And education is another great example where, on a per capita basis, the United States spends more than anywhere else, and certainly in the developed world. And yet, in terms of performance, it is amongst one of the worst performing. And we'll talk a little bit more about that.
Absolutely. And that applies also to healthcare.
Absolutely.
As well.
Yes. I mean, so
we're good at spending money, but not efficiently.
So those are some issues that we will certainly talk about, government efficiency clearly. But then just to close out, your other question related to that was about the distributional effects. And you're right, this is another item. When I was doing my PhD at Oxford many years ago, we never discussed income inequality, because there was a presumption or an assumption that as long as you created economic growth, you'd have no worries about income inequality. I mean, of course, a big assumption in that thinking was that you would have social mobility. People could actually move. What we now know is that social mobility has deteriorated in many of the developed countries. There are obviously now real questions about not only whether capitalism is sort of correlated with this increase in income inequality, but whether in fact it is income inequality is a natural artifact of the capitalist model. And so that's part of the debate that's been.
Do you think it is?
I see what people are saying. I think I'm a bit more optimistic. I think we probably haven't spent enough time trying to rejig the social mobility question.
Are you more a rising tide lifts all boats perspective?
You know, it's a great question. That slogan was the basis of globalization. I firmly believe in globalization on paper, but what we have seen is that there are massive pockets of people who have lost out in the globalization process. It's not just African farmers or South American farmers who've lost out because they're not competitive in a world that actually isn't completely free trade driven, but also, you know, the guts of the American Rust Belt have suffered considerably. And so, you know, I think the point to stress here is that globalization is something that on paper makes absolute sense, but the question is, can we actually implement it in a way that we can actually generate the types of promises of raising all boats in the way that it has been promised?
Or maybe the basic concept is globalization does make sense because of the overall increase in wealth, and then maybe you need targeted programs to address those distributional issues.
So that is one of the arguments. I think that one of the other aspects that complicates the discussion around income inequality is that we have kind of tried two extreme models to redress it. On the one hand, we have what you've just suggested, which is more of the left-leaning tax and redistribution model. On the other hand, we've had what I would call more right-leaning supply-side models, where essentially we keep taxes low and we assume that through the transfer of wealth in labor markets, et cetera, we would be able to improve people's living standards and therefore close the gap. In reality, we've tried both of these models and none of them have stemmed the tide. We've continued to see a widening of income inequality, which is why this is such a complicated issue. Otherwise, we wouldn't be talking about it, Aaron.
Is there a middle ground, for example, where that redistribution maybe is not focused on direct payments, but maybe is focused on job training, retraining, education?
So I think that that's probably what we're learning now. Since we
You should have asked me years ago.
I know, we should have really. But you know, one of the things I find quite fascinating is that you know, we assume that job training and reskilling is something that's quite easy. I think about myself as just one individual is very conscious of potential upside from retraining and reskilling, and I constantly force myself to think about my own continuous improvement. What am I doing to actually meet that sort of goal? And you know, the expectation or the sort of idea that we can just suggest that people do job training and reskilling, you know, certainly when you get closer to my age, which is more middle age, I think it's a lofty goal. I'm not saying it's impossible, and I'm not saying we should give up, but I'm just saying I think we should also be a little bit realistic about what is actually possible in terms of retraining. So I think it's a little bit more complicated than some of the sloganeering that we hear.
Okay, I think I just got criticized. We're going to take a break. We'll be right back with Dr. Moyo.
For information on how to help promote civil and mutually respectful discourse and support expansion of the distribution of our programs, please email info@harbertv.com.
I'm Aaron Harber, host of The Aaron Harber Show. You can follow the show on Twitter for instant notification of new episodes, live event invitations, outtakes, and behind-the-scene photos. And tweet us your topic and guest suggestions today. I'm Aaron Harber, host of The Aaron Harber Show. I very much would like to hear from you about the program, so please send me an email with your thoughts. You can suggest what topics I should cover, what guests I should invite to be on the show, or even what specific questions you would like me to ask. This is your program, so send your suggestions to aaron@harbertv.com. I promise to personally read every one, so email me today. And most of all, thanks for watching.
Join me and watch The Aaron Harber Show.
Watch The Aaron Harper Show.
Watch The Aaron Harber Show.
Watch The Aaron Harper Show.
Watch The Aaron Harper Show.
I'm Reverend Jesse Jackson. Watch The Aaron Harber Show and keep hope alive.
The Aaron Harber Show may be viewed 24/7 at no charge from any location in the world at www.harbertv.com.
Welcome back. I'm with Dr. Dambisa Moyo, and we're talking about all kinds of global issues. And we've been talking a little bit about trade.
Yes.
And of course, there's a lot of discussion in the United States of a border tax. I'd be interested on your take on that. The idea that, of course, if there's a tax on goods coming into the country, then it's American consumers who are actually going to pay more, not those other countries. And also value, I'd like your thoughts on a value-added tax, because most industrialized nations, most of our trade competitors have a value-added tax. And so our manufacturers seem to be at a significant disadvantage. Is that true? Talk a little bit about that too. And I know that's some fairly big topics.
Yes, it is quite meaty. I mean, I think what we should do for that type of a discussion is just look back in history. What is the evidence around increasing tariffs? And right here in the United States, there's a huge body of work. And to be quite honest, if we date back to the 1930s, post the Great Depression, Smoot-Hawley, we all know what happened. There were about 3,200 goods and services that had a tax imposed on them. The average effective tax rate was approximately 60%. And the consequences are largely undisputed. We had higher unemployment in the United States. We had slower economic growth. And I think it's pretty well established now that the recovery of the United States economy was delayed because of the imposition of those types of tariffs. So if we fast forward to where we are today, the world today is in a much more integrated place than they were in the 1930s on many metrics. And so, you know, it would seem to me that having some type of massive border tax would actually be quite deleterious, not just to consumers, but also to businesses. American businesses here that import, when you're talking about oil, for example, that import oil to be refined in the United States, I mean, they would potentially be impacted. You mentioned the consumers, but in retail, many retail businesses in this country are able to provide a low cost offering to their customers because they're able to keep because they're able to trade off of these supply and demand dynamics globally and be able to import at a lower price. With a higher tax rate, you're going to suffer and pass those on to the customer. So, you know, am I on balance worried about what the implications of a border tax are? Yes, I do feel that would not necessarily be a good situation, and I think that ultimately it would not do what it's supposed to be doing, which is to create jobs in the United States. I think it's a short-term fix for what essentially could create a long-term second-order effects in the economy.
We are in certainly in the United States, a consumer-driven economy. Over 2/3 of our economy is based on consumer consumption. We have an aging population where buying patterns tend to be more fixed. Dollars tend to be held onto a little more. Is that sustainable? Do you see consumer-based economies in the long run, especially with aging populations, looking at what's going even on in China as they go through things? But if you look at China in 20 or 30 years, is that model sustainable? And if not, what model would be more sustainable?
Well, I think that there's a sort of assumption in your comments that economies are sort of static, and you know, public policy is not. So if you look across the world, governments will be very familiar with the changing patterns and evolution of their demographics. India, for example, has got an increase of approximately 1 million people a month into their population. So they are looking at that and thinking to themselves, okay, how is this sustainable? So if you look at some of the forecasts around not just the age of the population, but the additional costs from longer life in terms of pensions and healthcare, those are obviously being factored in to public policy decisions. So what does that mean for your specific question in terms of long-term consumption changes? We are already seeing a lot of the changes that you're alluding to in shifts out of the equity markets more into fixed income, into more of a coupon-based, sort of a fixed type of earnings, which you just alluded to.
And you're not talking about shopping coupons, you're talking about bond coupons.
I'm talking about bond coupons, just to be clear.
Much more fun to clip.
Yes, that's true. But the point is that the reason I'm emphasizing the sort of dynamic nature of public policy and nations is because there are things that could be done to change that sort of a lot where, aging population, which based on consumption means a bad equilibrium. Immigration is obviously one of those things. Changing an economy away from consumption into other areas is also possible. You could get people to think more intergenerationally and think about investing in their own, progeny, thinking about the future. In places like China, you alluded to China, they're actually doing exactly the opposite right now, and And so it is a difficult feat to move from one equilibrium to another, but I do think that it's a little bit too simplistic to say it's sort of the end of the world if you have these different factors. The United States has been an economy that has been very good at rejuvenating itself, and so just because we don't know what the next sort of trick around the corner is doesn't mean that public policy is not attuned to some of these changing dynamics.
I like your optimism.
Eternally. Actually, we just haven't got to the bearish aspects. I am quite concerned about some aspects of the global economy.
Well, tell me what those are. What are your biggest concerns?
So, you asked, so I would say there's sort of 6 things that to me sort of warrant attention, and I think public policy needs to really get moving on this. And one is technology and the jobless underclass, what the implications of that are. A report that came out about 2 years ago from Oxford St. Martin University, St. Martin, talks about there being approximately 47% of job losses in the United States over the next 20 years. We're quite familiar with those types of statistics. Look around the US today, 80% of the states, so about 40 out of 50 states in the United States, have the majority jobs related to delivery, so trucks, taxi cabs, etc., which could be automated very aggressively with the advent of driverless cars.
And drones.
And drones, of course, absolutely. And so there's a real issue, a big debate there on what the implication of technology may be for job creation. And what are we going to do if we're all sitting on the beach? Can we all sit on the beach and be peaceful? So, question mark. Second issue is around demographics. We are now 7.5 billion people on the planet. We will continue to grow rapidly until we reach about 11 billion in about 2100. This is a critically important thing because the demographic shifts that we're seeing, certainly in terms of quantum, have never been seen in history or prehistory, and many demographers argue we'll never see them again once we pass 2100. Why is this important? It took 125 years to go from 2 billion people to 3 billion people. It's taken 50 years to go from 3 billion to 7.5. Massive increases in population growth. It's not just the quantity, though, it's also the quality. And there's been an underinvestment in education. We talked about the dollar amount. So it's not dollar amounts per se, it's about the actual quality of the investment, and that has obviously deteriorated quite significantly over many years. According to the OECD, for example, they claim that this generation of Americans, for the first time in the history of this country, will be less educated than the preceding generation. The implications for an economy that is becoming so heavily dependent on R&D and science and technology is huge. It's absolutely could be catastrophic. And in fact, McKinsey, the global consulting firm, put out a report saying this underinvestment in education could be so damaging as to put the United States in a permanent recession if nothing's done by 2050. Third, income inequality. We touched a little bit on that. Really, the issues around income inequality, about the sort of seeming intractability of solving the problem. There are lots of proposals going around, universal sort of basic income, issues around tax and spend that we've talked about, but I think we have to have some temerity that the two extremes haven't worked, and so it's somewhere in the middle. We need to kind of be thinking a little bit less ideological and a little bit more pragmatic about coming up with a solution there. Natural resource scarcity. I was very fortunate a couple of years ago to spend an hour with the Chinese president, President Xi Jinping, and a small group of us there. And the national resource scarcity was, to him, the biggest issue that their country is contending with in terms of creating economic growth, meaningfully putting a dent in poverty and the process of human progress. This is supply and demand dynamics. You've got, in terms of arable land, potable water, energy and minerals. These are scarce, they're finite, they're depleting, and yet on the other hand, you have massive increases in population, you've got increase in urbanization, so putting pressure on this imbalance. Of course, I also want to be clear and sort of balanced in thinking, because we have heard concerns about natural resource scarcity, Malthus in the 1700s, the Club of Rome in the 1970s, and we've tended to be bailed up by technology. So let's see what happens there, but nevertheless, it's a real issue. If we add a couple of more things to this list, the debt burden. Just in the last few months in the United States, there have been reports that the amount of auto loans, the sheer dollar amount of auto loans, I think is now on average $15,000 per person in the United States, or coming to about $2 trillion of debt, which is essentially in many cases subprime, concerns about whether this is actually another bubble that we've been missing. Student loans, you don't need me to talk about that, but
over $1.33 trillion.
Exactly. For a GDP, that's about 20 trillion. And think about this also, on a global basis, we now have debt to GDP ratio of around 350% debt to GDP ratio. Global GDP is $60 trillion. The questions we have to ask is it even possible to ever repay some of the debts that are out there? Even in the United Kingdom, I was just there recently in London, they've had an increase in unsecured debt. In fact, in November 2016, the amount of debt, consumer debt, is actually now at the levels that we last saw in 2008. So debt is a massive discussion point for us in public policy.
It's the millennials' problem.
Exactly. And then the last point is just around productivity growth. You'll be aware, I'm sure, that the reason one country grows, in fact, 60% of why one country grows, another one does not, is around productivity. How do they actually absorb productivity? But for many developed countries, and this is critical, for developed countries, we've seen a decline in productivity across many different sectors. And so public policymakers are spending a bunch of time saying, what the heck's going on here? What can we do to actually improve productivity? And so just a few things here that I can go on. The list is greater than that, but just a few things to give you some flavor for what I would say are structural concerns in the economy.
So, in terms of the decline of productivity in less developed countries, which really, when you
more
look,
developed
countries,
yes.
when you look at what's happening in technology, that seems to be a surprise.
Well, just to be clear, we're talking about more labor productivity, so you can kind of understand that, because on the one hand, you're seeing, the AI debate, issues around technology, taking over jobs, so to speak. I kind of hesitate to use that type of terminology. But we are not seeing, and also if you look at Robert Gordon's book, he would argue that a lot of that loss in productivity is because we just aren't coming up with that great ideas. In a sense, there is that view that actually, yes, we have an iPhone, but really it was Alexander Bell's genius who came up with the telephone in the first place. So that a lot of the improvements that we're seeing are really on the margin. We're still flying. London to New York is still 7 hours. Guess what? It was 7 hours just after, a number of years after the Wright brothers developed the ability to fly. So,
though actually we've regressed, because
in some sense, yes.
For those of us who actually had the pleasure of flying the SST, it was 3 hours.
Yes, the Concorde was 3 hours. That's right. I did fly it as well. And yes, and so there are those bigger debates around whether innovation is actually on the decline, and therefore this question about whether we really are, where we are seeing this weaknesses, increases in productivity.
All right, we're going to take our last break, and we'll be right back with Dambisa Moyo.
For information on how to help promote civil and mutually respectful discourse and support expansion of the distribution of our programs, please email info@harbertv.com.
Hi, I'm Aaron Harber, host of The Aaron Harber Show. Because I've never done endorsements or commercials, people ask, how are our programs funded? Especially because we provide them as a public service to all our broadcast outlets. It's expensive to produce our show, whether we do them here in Denver or go to places such as Aspen, Washington, D.C., or even Iraq. The answer is we depend on contributions to support our work to bring you some of the nation's top opinion leaders. Individuals, businesses, foundations, and other nonprofits make tax-deductible contributions to the Democracy and Media Education Foundation to help allow us to continue to work for you. To find out more, to make a donation, just go to dmefd.org. The DMEF is a tax-exempt public charitable organization and has promised to dedicate 100% of every contribution to support our public affairs initiatives. If you believe, as I do, in the need for a forum which promotes civil discourse and mutually respectful discussion, I hope you'll decide to make a contribution today. I'm Aaron Harber, host of The Aaron Harber Show. Find us on Facebook to get all the latest updates, see behind-the-scene photos, and make comments and ask me questions. You can see episodes before their TV broadcast, so like the show today.
Join me and watch The Aaron Harber Show.
Watch The Aaron Harper Show.
Watch The Aaron Harber Show.
Watch the Aaron Harper Show.
Watch the Aaron Harper Show.
I'm Reverend Jesse Jackson. Watch the Aaron Harber Show and keep hope alive.
The Aaron Harber Show may be viewed 24/7 at no charge from any location in the world at www.harbertv.com.
Welcome back to the show. That's all we have, though, for part one of our special two-part series with Dr. Dambisa Moyo. Make sure you watch part two. I'm Aaron Harber. Thanks for watching.
Please contact us. We want to hear from you. And thanks for watching.